Hey, it's Jeff Harrell with movingtomckinney.com with your August 2024 market update. Are interest rates coming down? Are we in a balanced market? Is now a good time to buy? We're going to talk about all of that and more. We're going to look at the national landscape. We're going to look at the local landscape here in McKinney. So let's get started. As you may know, there are 10 reasons why people buy or sell real estate. You can see them here, but some of the highlights: move closer to family, just need more room. Your house just doesn't fit your needs anymore. You want a vacation home. Perhaps you're renting and want to build some equity. You've got equity and you want to use that equity for something else, school or building a pool. You want to upgrade your neighborhood. Maybe you're an empty nester like me and you want to downsize. Perhaps you just want to live in a different area, and there's always those life events. So which one of these perhaps is most relevant to you? Well, I want to tell you a little bit about Mike and Erica. They actually want to, like a lot of people, move closer to family. They actually want to move to McKinney, which is great news for me. But is it a good time? A lot of people are waiting for interest rates to come down. They're waiting for inventories to go up, and so they are waiting. Is it a good time now for Mike and Erica? Well, we'll talk about that. Let's look at a few quotes. This is from the New York Times. Fed Chair Powell signals that the time has come for a September rate cut. You may have been hearing a lot in the news that a lot of us expect September to be the month where we start to see some rate cuts. As of today of this recording, 30-year fixed interest rates are 6.22. That's historically pretty low, but relative to what we saw back in 2021, 2022, it's below 3%. It seems high. It really isn't, but it's higher than it's been. We're not going to see below threes, I don't think, ever again. A little bit of an artificial lowering of the rates because of the conditions that we went through with COVID. But here's what they say. Jerome Powell used in a speech in Jackson Hole to signal that the Fed will begin to cut rates on September 18th and to voice weariness about the job market. What are some of the signals that make us think that rates will be cut, that the Fed will start to cut some rates? Well, they always want to look at where is inflation. We all know that inflation has been higher lately. It has started to come down. They want to see it close to about 2%. We are currently at 2.6%. So we're seeing a lowering of inflation, which would signal a rate cut coming. What else are they looking at? Well, they want to look at unemployment rates. Are unemployment rates starting to rise? Well, they rose a little bit in the month of August. They're still below our kind of 70, 75-year average, but unemployment's jumped up a little bit. So that's another thing that they're looking at. And here's what money.com says. Nearly 80% of economists surveyed by Bloomberg recently predict the Fed will make a quarter point decrease to the range of 5 to 5.25 in September. Does that mean that's what mortgage rates will be? No, but it does mean that mortgage rates should go down. Now, here's what most economists expect. They expect at least 2 cuts this year. So we may see one in September. We may see one a little bit later in this year as well. In fact, 73% expect two adjustments this year. Generally, the rate cutting cycle is not one and done. This is from Lawrence Young, a chief economist with the National Association of Realtors. 6 to 8 rounds of rate cuts through 2025 look likely. So people are starting to get excited, thinking that rates are going down, and we may see that. So does that mean you should wait until rates are going down? Good question. Here's what most people think is going to happen. We see, as I mentioned today, we're at 6.22% here in September of 2024. This is just a slide showing all the projections from Fannie Mae, MBA forecast, NAR forecast, Wells Fargo. Everyone thinks rates over the next 3-4 quarters will continue to go down. So does that mean you should wait? Well, timing the market's tough. In fact, timing the market is basically impossible, as you can hear from Jacob Channel. If you're always waiting for the perfect market conditions, you're going to be waiting forever. But now, buy now only if it's a good idea for you. If you are ready to buy or if you're ready to sell, now is always a good time. And we'll talk a little bit about why that is here in a second. The market, you hear about buyer's market, you hear about seller's market. Where are we nationally? We'll look at this nationally, then we'll talk about McKinney here in a second. Nationally, the market is starting to balance, meaning that there's not favorable conditions for buyers over sellers or sellers over buyers. You have a good balanced market. Let's look at some of the data. What defines a balanced market or a neutral market? Here's some quotes. In general, a housing market with 5 to 7 months of supply could be described as a balance between buyers and sellers. A 5 to 7 month supply of homes indicates that it is a buyer's market from Realtor.com. A 6-month supply is considered a balanced market between buyers and sellers. All that to say, 6 months is typically what we think of in terms of 6 months worth of inventory, houses available in the market that would define a balanced market. So where are we? You can see where we are nationally. It's been a buyer's market back in 2010. It switched over to a seller's market. You guys remember all the multiple offers and no inspections and waiving all kinds of things, paying title, all that. We're starting to see it creep up towards more of a balanced market. Today, nationally, we're starting to see a little bit more inventory. And again, we'll talk about what we're seeing here in McKinney here in a second. Homes are sitting on the market a little bit longer. That would indicate more options, more supply than demand, and sellers are receiving fewer offers. More buyers are insisting on home inspections and appraisals. Remember, we didn't see that the last few years. And inventory is definitely rising on a national basis. That's from Lawrence Young from the National Association of Realtors. Homes are sitting on the market a little bit longer. This shows you about the last 3 years from 2022 to here at the end of 2024. In August, we saw about 53 days on market. So we saw a high in January of 69 days. It dropped down. Summer months, things tend to move pretty quickly. Now we're entering Q4. We're seeing that slow down once again. Sellers are receiving fewer offers. In July of last year, they were getting at least 3, and now we're seeing that drop below 3. So fewer offers on the table again, kind of showing that supply higher than what we've seen in the past. Inventory is increasing. Unsold inventory of existing homes at the current sales price. You can see through July was at about 4 months, and that's from the National Association of Realtors. When inventory rises faster than demand, prices have to adjust eventually. Increasing inventory levels are a sign that the market is starting to balance out. That's from Hannah Jones from Realtor.com. And then the number of price reductions is increasing, meaning when houses are put on the market, remember we saw that feeding frenzy where houses were selling above asking consistently. We're starting to see now people are listing and having to drop down that price because it isn't selling. And that's why, by the way, it's important to have a good realtor who understands the market, who understands market value. We'll talk a little bit about that here in a second as well. And then here's a quote from Mark Fleming from First American. The faster housing supply increases, the more affordability improves and the strength of a seller market wanes. So again, a lot of just signals that we're starting to enter more of a balanced market nationally. Here are the markets that are making the top 10 list of buyers markets and the top 10 in sellers markets. And you can see only one in Texas, and then McAllen, southern part of Texas, would be a buyer's market. But just FYI, some national places where things are either falling into the buyer's market. So more options for buyers. They have a little bit more control. More of a seller's market where you've got a little bit more of a feeding frenzy around homes. That's national. Whether you're selling your home in a buyer's market or a seller's market, you should work closely with your real estate agent to find the best way to market and sell your home. Understanding market conditions where you are is very, very important. And we'll talk about that here in a second. And that leads me to the importance of pricing your home right. You want to price it where it will sell. Home prices are starting to moderate. We saw huge increases in home prices and home values through 2022. They were going up every month 20%. You guys remember that? Hopefully you've been the beneficiary of your home increasing in value. We saw last year that actually flatten and even drop down a little bit. So prices went down a tick, and we're starting to see it level back out. I like to bring this up because a lot of people say, hey, let's wait 6 months and our house will be worth that much more. Well, it's starting to level out. So 5% versus a 20%, big difference. So we're starting to see home prices moderate a little bit. Homes priced right are selling quickly. Home priced too high are deterring prospective buyers. That seems like a no-duh statement, but I've heard a lot of sellers say, hey, let's price really high and see what happens. And when they don't sell and you have to mark it down, then all of a sudden you get a stale listing and prospective buyers start to think there's something wrong with the home. So pricing it matters. Pricing it correctly matters. And here's a bit of an eye chart, but let's talk a little bit about underpricing versus overpricing, and where you want to be is really in that market value, pricing it correctly. You underprice it, you're going to lose some value. You're going to decrease your buying power. You're not going to have as much to spend on that next house if you underprice your home. It also sometimes it deters buyers because they think something's wrong. They're like, why is this house priced so low? Is there something wrong with it that I'm not aware of? If you overprice it, it sits on the market longer. It, again, deters potential buyers because it's not in their price range. And price drops can send also the wrong message to say, why hadn't this house sold? Why are they having to drop the price? So really where you want to be is on this Venn diagram, which I love Venn diagrams, by the way, in this middle section where you price it according to actual and real market value. U.S. News has said setting an unrealistic high price with the idea that you can come down later doesn't work in real estate. A home that's overpriced in the beginning tends to stay in the market longer, even after the price is cut, because buyers think there must be something wrong with it. So the number of price reductions is increasing as supply increases, as the values of homes starts to slow relative to what we've seen in the past few years. People can still think their house is worth X and it's really worth Y. We're starting to see it sits in the market for a little while and you're having to cut the price, reduce the price. We're starting to see that increase. U.S. News and Real Estate says you want to sell your house for top dollar, but be realistic about the value of the property and how buyers will see it. If you've overpriced your home, chances are you'll eventually need to lower that number. But the peak period of activity that a new listing experiences is already gone. When something goes in the market, it gets people's attention. It's like something new, haven't seen it yet. I've been looking for that right property. A lot of excitement, but if you price it too high, like, oh, that doesn't fit my price point, you're going to lose some interest. So take advantage of that excitement as a new listing. All right, that's national, and we'll talk about some conclusions here in a second. Let's look at McKinney. What's going on in McKinney? Well, here's the total listing count. You can see that this is from August of 23 to August of 24. The number of homes for sale, again, supply is going up, has increased over the last several months. So we're starting to see an increase in supply. Does that mean we're in a balanced market? We'll talk about that here in a second. Here's the active listing count. So the slide before was total listings. This is active. So we're excluding pending, expireds. Again, still increasing month over month. New listings are down, which means you're having houses sit longer because we didn't increase the number in August, but you saw the number of listings go up. That means houses weren't moving as quickly. Here's the pending listing. You can see that's dropped a little bit as well. And then here, I'm sure you're interested in this number. What is the median listing price of a home in McKinney? It is a little below 549. We were as high as 602 a year ago, and we're down in the 545 range here in August of 2024. Median listing price per square foot. This is an important factor when you're looking at what's the value of my home. You want to look at what are things that are like my house, as similar to my house as possible, similar neighborhoods, sizes, features, amenities, pool, no pool. You want to get as close to a comparable as possible. What is that selling per square foot? Actual sold, not what they want to get, but what they've actually sold, and see what that is. You can see that the price per square foot of available homes right now in this market is $222. Here's the median days on market. You can see in the summer they moved quicker. That's pretty typical as people want to move when school's out, get to that new neighborhood before school starts again, and then starts to slow as we enter Q4. What's interesting is I think is going to be when interest rates do go down, which we think they will in Q4, will we see a little bit of a frenzy and see this start to level off in Q4 as people want to take advantage of that lower interest rates. Number of homes with price reductions. We talked about this in the summer months, in the beginning of the year. We actually saw the number of homes with price reductions pretty low. And then over the last several months, we've seen that increase. Median size for square feet, pretty consistent over time. About 2,500 to 2,600 square feet is the typical median square foot size of a home for sale in the McKinney area. Months of inventory. This is super interesting. So you saw the annual numbers. This is the McKinney numbers. Remember, 6 months would be considered a balanced market, 6 months of inventory. We are sitting at about 2.8. Isn't that interesting? Knowing the number of people in as fast growing as McKinney is, the number of people who are either moving or want to move to McKinney, I think what's going to happen when we start to see interest rates go down is you're going to get a bit of a frenzy, and there's not a ton of inventory out there. So we may see home prices spike a little bit once those interest rates go down. So all that means is if you're thinking about buying now, it may be a great time before that frenzy hits. You can always You can always get a new mortgage, refinance. That's the word I was looking for, later, but that home price you can lock in now could be a super smart move for you. All right, all that to say, we're 20 minutes, perfect. Here's the conclusion for our August 2024 market report. All signs are pointing towards a continued rate decrease. We've seen a little bit of decrease already as people anticipate the Fed cutting rates. We think we'll continue to see that, but timing the market is super difficult. So be wary if you're trying to time the market. Inventory is low in our area here in McKinney. Once rates drop, there could be a frenzy. Now is always a good time, and use a realtor to help you price your home or find a home for that matter appropriately, because it's super, super important. And if you're interested in chatting, let's set up a free consultation call. Go to movingtomckinney.com. You can set up a free call with me there. I would love to chat with you about your situation and see if it's a good time, the right time, or not the right time for you to make a move. So with that, thank you so much for checking in and for listening, and we'll be back next month for our October 2024 market report. And also go to our YouTube channel to look at all kinds of videos about McKinney, about the area, schools, new businesses, shops, you name it, we're going to talk about it, and that is on YouTube. So thanks so much. We'll talk to you next month.